Today we're doing our monthly market snapshot. We are going to be going over some housing market news in the Temecula Murrieta Menifee Valley. We're also going to look at what's going on with the national housing market. We're going to go over some articles first and then stats at the end. I'm Jessica with the Real Broker and the Genung team, and I've got my husband Chris here as well. He's going to be chatting.
Let's give a quick shout out to Michael Bidlack, longtime viewer. And he commented on a t-shirt last time I was in my producer box right here. This week I've got Best Pizza and Brew shirt on that we got from the new pizza place right there on Los Alamos and the 215.
Yeah, good new spot. I guess they're down in San Diego. I guess there's several of them. I'd never heard of them. We popped in there after a game one day, and yeah, good beer, good food, good service. Check that one out if you guys are looking for a new pizza joint. Okay, should we jump right into it?
Let's do it.
All right. Okay, let's look at some articles. I thought this one from Realtor.com was interesting. This one's home sellers are pricing too high and not listening to the market, experts warn. We're experiencing that in our market too. That's not just a national thing. Home sellers with unrealistic price expectations are setting themselves up for pain in a softening market that increasingly favors buyers, warns housing market experts. I would agree with that the market is softening in our area. We have kind of almost like just hopped over the spring selling season. It's been very lackluster. Seems to be picking up a little bit, but nothing major at the moment. But I keep seeing like these brief signs of picking up, but then it's like, yeah, maybe it's not. Maybe it is, maybe it's not. Nationally, the share of home listings with price reductions hit another multi-year high in April, indicating that sellers are increasingly overestimating what their house will fetch in the current market, although the problem is deepest in the South and the West. So that's us, the West. Despite these warning signs, seller confidence remains staggeringly high, with 81% of potential home sellers predicting they will get their asking price or higher in a Realtor.com survey conducted in March. We're experiencing that in our business as well. I would say, when you look at the listings around sellers, I would say that they are a little bit overly optimistic at the moment. As far as sellers that are getting their asking price lately, we can only speak to our personal business. We'll run stats at the end of the video, but in our personal business, it seems like the more entry-level homes, the homes that are at the lower price points are more likely to sell quicker, more likely to get their price. I feel like the mid-market and the luxury market seems to be struggling a little bit with more buyers on the sidelines. I thought this chart was very interesting, so we'll put up this map for you to take a look at. Chris always loves a good chart and maps.
I always put them in the newsletter.
We do. We have a weekly newsletter if you want to sign up for that, that we send out every Friday, that Chris will pick we read a lot of housing news articles and we pick the best one. He puts it in the newsletter. Sign up for that is down below in the description. So price reductions surge as sellers overestimate the market. Nationally, 18% of listings saw price reductions in April, the highest share for the month of April in records dating to 2016. Arizona and Florida led the nation in price reductions. You can see California here at 16% of listings received a price reduction in April. We're kind of in the middle of the gradient scale here. So we're not going gangbusters like if you look over here in New York and New Jersey. I'm seeing a lot of feedback from agents in those markets, like what spring slowdown, like they're still off to the races in those markets. But here we're softening, and then I'm seeing a lot of agent chatter about Arizona especially, which you'll see it's the darkest state there at 28% price reductions in April. That's a very large number. And then Florida has been making a lot of news too. They have a lot of inventory. Prices are coming down in a lot of areas of Florida. They're coming down in a lot of areas of Arizona. They are not coming down in our area yet. We'll get to that here in a little bit. While market conditions have changed, most of the sellers likely have healthy equity following a surge in home prices and still stand to gain handsomely on a sale, even if they don't achieve the price of their dreams. This is what I kind of wrestle with a little bit in our business, like it's impossible to time the market and to sell at, you just have to get lucky if you're going to sell at the absolute peak. But a lot of times once it seems like homeowners see that peak, they don't want to sell for anything less, even if they just bought a few years ago and, maybe now they're going to make 200,000 instead of 250,000 or something. It always kind of amazes me how it's almost sometimes just doesn't seem good enough, even though the sellers have been lucky to have very abnormally high appreciation in the past few years, and you can still lock in good appreciation. If you do decide to sell, it just might not be for the top dollar ever. This is an analogy that I've heard before as it relates to pricing your home if you're a seller. And we explained something similar during our listing presentations, but I kind of like I might steal this one. But selling a house is like running a marathon. And when you choose to price too high, you've let every other runner get 20 miles ahead of you before you even take your first step. It's almost impossible to catch up.
That's a good analogy. And then our other one is just chasing the market down. You don't want to be too high and then having to adjust down. And then that's also hard to catch up, just like the marathon, giving people a head start.
Yes, exactly. And this article goes on to talk about the curse of a stale listing. You do not want to end up being a stale listing and aging on the market. This market, it is taking some patience, even 30, 45 days or so. We had a listing recently that it got a very small $5,000 price reduction. All of a sudden, we had 3 offers in 1 week at the lower end of the price market. So it's, not always tragic ending if you're a stale listing, but it's typically not good, and you can often chase the market down, and less buyers may come to see your home because they might think that something's wrong with it. Next article, home sellers now outnumber buyers by largest margin in 12 years, report finds. This is a CNN article. They're going to quote a Redfin report quite a bit in here. After years of bidding wars and climbing prices, the balance of power in the housing market may finally be shifting. It does feel like it's shifting to balanced in our market, maybe slight buyer advantage. So nothing huge yet, but definitely shifted from where we were even just a year ago. Home sellers now vastly outnumber buyers in the U.S., according to an analysis released Thursday from real estate company Redfin. The report found there were nearly 500,000 more home sellers in the market than buyers as of April, the largest gap between the two groups since Redfin began compiling the data in 2013. Yes, that's why the listings are moving slowly, is we have more listings than we have buyers making moves at the moment. I do think that's going to be temporary. We'll get to that here in a minute. Despite, they say, the recent drop-off in demand for new homes, prices have continued to rise, and that is the case in our area as well. We're going to run the stats here at the end of the video, but all 3 cities are up year over year. The median existing home sales price rose 1.8% year over year in April to $414,000. That's a national number. Wish that was Murrieta's median number. According to data released by the National Association of Realtors last week, that's an all-time high for the month of April and the 22nd consecutive month of year-over-year price increases. That's another thing that we're going to look at when we run the stats. New listings are way down. They were down last month. They're down again this month. So while we're seeing a slight buyer advantage at the moment, I do think with the fewer new listings coming on the market that it's going to balance back out and, possibly revert back to a seller's market, which is what it typically is in our area. So we'll see how it plays out. The average rate on the standard 30-year fixed mortgage, the most popular type of home loan, is currently hovering just under 7% and threatens to go even higher amid unrest in the bond market. So the rates are not going down. They have been creeping up. That was for a conventional loan. They're right around 7%, and you can get, I'm seeing VA, FHA loans quoting around 6.5 at the moment. Where we really start to see our market move is when we get into the 5%, and I actually do not have that article to share with you today, but I was listening to it on a podcast where Fannie Mae is actually projecting that we're going to be in the low 6s by the end of this year, and we're going to be in the 5s next year. I disagree that we're going to be in the low sixes at the end of this year. I hope that they're right, but I disagree with that. So we'll see what happens. But that was Fannie Mae's prediction. So if we do get into the fives next year, that's when our real estate market really picks up, and all of the buyers that have been waiting on the sidelines, a lot of them are going to be piling into the market, and then we will be in a seller's market, I feel, once all the buyers that are on the sidelines come back, because people are waiting at the moment. Although now is a good opportunity time for buyers. If you can kind of get past the fear of the uncertainty right now, there is opportunity. So you want less buyer demand, you want softer prices as a buyer. So it's ripe for home buying right now, although a lot of them are sitting on the sidelines. Speaking of buyers sitting on the sidelines, the article goes on to say, according to a survey released Wednesday by Bank of America, 75% of prospective home buyers are waiting for home prices and interest rates to fall. It hasn't really worked out well for home buyers that were waiting for interest rates to fall over the past few years, and certainly not the ones that were waiting for prices to fall even before COVID. And during COVID, people were thinking we're in a bubble, I'm going to wait to buy, and though a lot of those people got priced out of the market. According to Redfin, there haven't been this many homes for sale since March of 2020, and there haven't been so few buyers at any point since Redfin began tracking in 2013, with the exception of April of 2020, when the housing market ground to a halt at the start of the pandemic. Speaking of brief buying opportunities, we were very busy during that time, right when the pandemic hit, and actually all of our buyers that we were in escrow with at the time did move forward and decide to close, and they were happy that they did, and we were able to get some better deals. It was like a month or two that we were able to get properties at asking price. I think we even got closing cost credits for one of them, which was not happening in those years. Last time we saw a little bit of opportunity was right around March of 2020, and then at the end of 2022, when interest rates started going up and our inventory started piling up again, buyers kind of held off, like, oh, is this going to be, the start of the next crash? But sure enough, as we headed into the spring selling season of 2023, we picked right back up again. So prices did not come down.
That's what I think. This period right now is just like 2022. That's what we said in our forecast video, with the listings starting to pile up, and we're kind of approaching some of those numbers that we said in the forecast. 400 in Menifee, right?
Yes. Yeah, exactly. This certainly does feel like the end of 2022, and just interest rate driven was what was happening then, and that it feels like we're very sensitive to the interest rates at the moment as well. And I don't blame buyers. The interest rates, they have doubled or more than doubled in some cases since over a few years ago. So it's painful with the increased prices and the higher interest rates. Back to the article. Lastly, that we'll say about this one, although home prices are still climbing, Redfin's head of economic research, Shen Zhao, told CNN that the company estimates a 1% drop in home prices by the end of this year. Generally, the ratio of sellers to buyers seems to be a predictor for home price growth, but with a lag of about 3 to 6 months, Zhao said. The reason we think home prices will fall by 1% and not something larger is because it's actually very hard for home prices to fall unless sellers have to sell, she added. Sellers can always decide they don't like the prices that are currently in the market and decide to stay in their home. And we are seeing a lot of people do that in our market, that they're not able to get the price they want. So, okay, we're just going to stay in the home for a little while longer, and we're going to list it again in a couple months or however long. We're going to pull the property from the market, and we're going to rent it for a while until we can get a price that we like.
So on that 1%, for the crash bros, 1% is not the 10 and 20 and 25% that people have been waiting around for. So if you're waiting for that, according to this expert, that's not going to happen.
They're not going out on a limb with that prediction, I feel like, because, it's been fairly flat this year. So yeah, if it dips down 1%, it's still going to be fairly flat. The last article that we're going to go through is from the National Association of Realtors. So Realtor Opinions, and here, more listings, fewer closings, is a market shift underway. Sales of existing homes slowed last month, dimming hopes for a robust spring selling season despite the high number of listings in years. sellers, buyers remain cautious. That's what we had just talked about. Home sales have been at 75% of norm or pre-pandemic activity for the past 3 years, even with 7 million jobs added to the economy, says Lawrence Yoon. He's NAR's chief economist. Pent-up housing demand continues to grow. Any meaningful decline in mortgage rates will help release this demand. I agree with that, and we saw that actually at the end of 2022 when the rate started to dip back into the five. When we get into the fives, that's when the market really starts to pick back up. Low sixes helps. Five seems to be like when buyers decide that they're ready to go. One encouraging sign: first-time home buyers are beginning to reemerge. They accounted for 34% of existing home sales last month, their highest share since July of 2020, according to NAR. What I was saying earlier, that entry-level market seems to be chugging along and doing okay. So first-time home buyers are taking the plunge, but the move-up buyers, they're sitting still for the moment.
And in our area, that means Menifee more than Murrieta and Temecula. Given the pricing.
Yes, Menifee has been big for our clients that are first-time home buyers, clients that want new construction. You can get a newer home, it's less expensive, and it is a happening city out there now that it's grown like crazy of everything that you need, all the shopping and freeway access, a lot going on in Menifee at the moment. I can't remember from our forecast video what your forecast was through the end of this year, but you were predicting increases in inventory across all 3 cities that we analyze. And that is on its way to coming true. We'll see.
We're getting there in Menifee, and Murrieta and Temecula too. It's starting to look a lot more like that time period that we were talking about, the end of 22. Going into 2023.
I like these graphics that the National Association of Realtors point out. The housing snapshot for existing home sales. This was from April, so sorry, these are a little bit older, but they are predicting 4 million home sales in this throughout the United States, which is very low, but I actually think that it might be sub 4 million. That's my prediction. I'm going to make that right now, but we'll see. Anyway, month over month and year over year, that the number of home sales are down according to this chart nationally, and then months of inventory is up to 4.4. Whereas in April of last year, it was at 3.5%. So it's up almost a month. We have a month more of inventory year over year. Median sales price nationally is up 1.8. And that really has nothing to do with our local market, because all real estate is local, because you do have, some places in Florida, they're down 7%, they're down 10%. And then you have some places like in New Jersey and New York, they're up 10%. So the median for the US is 1.8%. We'll get to our local stats here in just a minute. Inventory. Housing inventory has improved significantly in recent months, rising 20.8% from a year ago, according to NAR. House hunters are finding more options, creating more competition among sellers. However, according to a newly released NAR report, the uptick in housing inventories hasn't been evenly distributed. In particular, the supply of affordable homes for low and middle income buyers remains well below demand. And I think that's because the buyers are swooping those up, basically. Thought this was interesting. All cash buyers also continue to drive competition, making up about 25% of transactions last month. So a lot of cash still out there. A lot of investors also. We have a lot of investor clients right now. I think we have 3 clients doing a 1031 exchange. So there is a lot of investor movement at the moment, which is also kind of interesting given the market. But investors, they are not so sensitive to the uncertainty of the news, and they look at the numbers, and I think that they realize that now is a good time to make a move as well. Regional outlook for home sales. So here's a closer look at how existing home sales failed across the country in April. I'm only going to go over the West because that's where we are. Existing home sales fell 3.9% in April, reaching a seasonally adjusted annual rate of 740,000. That's down 1.3% from a year ago. Median price of $628,500, down 0.2% from a year ago. And now I think we will hop into the local stats so you can compare. Okay, we're going to run the numbers as we always do, single family homes only for Menifee, Murrieta, and Temecula, starting with median sales price. So median sales price month over month in the city of Menifee was up 3.8% or $22,500. So really nice appreciation month over month in Menifee. So actually this might be one of the highest prices I've seen in Menifee at $608,500 for the average price for a single family home in Menifee, and that is an increase of 1.4% year over year or $8,505. So good appreciation going on in Menifee, and this is what we would normally see in the spring selling season. The prices do tend to appreciate month over month this time of year, but they're not doing that in all of the cities. And Murrieta also has a month over month price appreciation of $15,852 or 2.2%. Year over year, the median sales price has increased $27,102 or 3.9% year over year. This 3.9% in Murrieta is pretty typical of what we see on an average year throughout the United States of home appreciation. It's right around 4%. Moving on to Temecula, median sales price is the only city with a month over month decrease of $29,500 or 3.7%. Temecula's ups and downs are just more volatile right now. I anticipate it'll probably bounce back up a little bit next month. 800 seems to be the magic number where Temecula seems to come back and find that price over like the past year or so. Year over year, Temecula appreciation is up $11,500 or 1.5%. All three cities have a year over year gain still. Number of closed sales in Menifee. So number of closed sales are down across all three cities. Month over month, the number of closed sales in Menifee is down 10 homes. Year over year, the number of closed sales is down 31 homes or 18.5%. So fewer homes are selling even though we have more listings. So that's why the active inventory is piling up. Number of closed sales in Murrieta month over month is down 6 homes, which is fairly flat. And then year over year, it's down 5 homes or 3.9%. Moving on to number of closed sales for Temecula, month over month is down 22 homes. There were 94 homes that sold in May of this year. That is a month over month decrease of 19%. And year over year, there is a decrease of 25 closed sales or 21%. So Temecula has the largest decrease in the number of closed sales percentage-wise. Moving on to median days on market is mostly up across the board with one exception, but starting with Menifee, Menifee's is up month over month and year over year. Median days on market month over month has increased 5 days from 21 days to 26 days. Year over year, it has taken 10 days longer to sell a home in Menifee. Moving on to Murrieta, median days on market. This is the exception to the stats here. Month over month in Murrieta, for whatever reason, it is taking 4 days fewer to sell a home. It's at 16 days to sell a home in Murrieta, so that's still quite quick. And year over year, though, it's taking 4 more days. A year ago, it was only taking 12 days, whereas now it's taking 4 more days, 16 days on the market. Lastly, we're going to go over Temecula median days on market. Month over month, it's taking 5 more days to sell a home or 17 days. And year over year, it's taking 8 more days to sell a home in Temecula or 17 days total. Homes across the valley are still moving quite quickly. It honestly doesn't feel like they're moving that quickly because I'm seeing a lot of listings with these really long days on market, but these are the stats for the single family homes. Active listings, starting with Menifee. So this is our inventory, and the additional inventory, it's slowing. We were getting a lot more listings. Now, month over month, we're not getting very many new listings that we would normally see this time of year, but we are up across the board year over year in all 3 cities as far as our inventory goes. So month over month, there is 1 fewer listing in Menifee or 437 homes for sale. Year over year, there are 82 homes for sale in Menifee, up 23.1%. Active listings in Murrieta are up month over month, 16 homes, up 4.4%. Year over year, it is up. Active listings are up 125 homes, which is a 49.4% increase in inventory. So if you are a buyer this year, you have a lot more to choose from than you did last year. If you're a seller, you have a lot more competition than you did last year from other sellers. Active listings in Temecula month over month are up 16 homes. There's 399 single family homes on the market, and that is an increase of 4.2% month over month, which is not very much going from April to May in the spring selling season. So again, lackluster spring. Year over year, the active listings are up 115 homes or 40.5%. So that is another huge increase in inventory compared to last year, which was anemic. But this year we have a lot more choices than last year. Number of new listings is the last stat that we're going to take a look at. And this one has been the big news lately, and this is why we're having the lackluster spring. And this is also why I think that this kind of reprieve for buyers is short-lived, because we are not seeing the amount of new listings that we would normally be seeing right now. We are seeing decreases in new listings. So we're getting a decrease in, we'll likely see a decrease in inventory if this trend continues. Month over month in Menifee, there was a decrease of 15.8% new listings. And then year over year, there was a decrease of 13.7% new listings. New listings in Murrieta had a decrease of 23.3% month over month. So a very big decrease in new listings. Sellers are deciding to wait and hold their homes off the market for right now. Year over year, there is a decrease of 8.1% new listings in Murrieta. Lastly, we're going to look at Temecula, and Temecula has the one anomaly, but not month over month. Month over month, we're still down 10.9% new listings, but year over year, Temecula does have a little bit of an increase in new listings of 11.6%. So Temecula is the outlier year over year as far as new listings go, but that's still a very low number historically. That's going to wrap up our monthly market snapshot. Thank you guys always for watching. We appreciate it. We'll see you next week. Bye.